So anyone that is trading the wheel strategy or selling covered calls or selling cash secured puts, there are two main numbers that you all need to know about every single position. That is what is your cost basis and what is your break even. And these two numbers are so important, especially when things go wrong in a position that you got assigned shares when you sold put options and the price has dipped so low that you can't even sell covered calls at your cost basis. So in this video, I'll be sharing with you absolutely free my cost basis sheet that not only will give you these two numbers, but will also show you what if you decided to sell another put option, what your new cost basis and break even would be very, very quickly and very, very simply. The link for that will be down below in the description for you to have a look at. And like I said, we'll be going through a live example with Palantir. So I've taken a screenshot from my brokerage account just to show you where I am with this position. It's currently in a loss. And then what we're going to do, we're going to show you how we come up with our cost basis and break even. And then I have already put a put option, which again, I've already done a video of this live on this channel. So I'll link to that in the top right corner and down below. So you can see how these numbers affected my kind of cost basis going forward, if I was to be assigned. So just very quickly on Palantir, I own 800 shares of Palantir at a cost basis of $20.48. And you can see here that the last traded price is $9.19. So I'm about, just over 50% down on this position, or in monetary terms, about $9,000. So this is all the information that your broker kind of gives you. But what we want to understand is, or what I really want to understand is, I know my cost basis is, or my average price is 20.48. What I want to understand is what's my break even? Because obviously I've sold a lot of put options or to obtain these 800 shares. I have sold a lot of covered calls to obtain these 800 shares. While I've maintained and held these 800 shares, I need to take that into account to tell me what my break even is. And that is what this calculator does. And it's all the formulas are all done for you. All you need to do is just put in anything that's in yellow is what you need to do. And to obtain your own copy and put it in your local drive, you just do file, make a copy, and then it'll just add it to your own Google Drive account. So the first thing you need to do is put in how many shares you own. That's very simple. We know we own 800 shares. Now, the next thing is you need to put the total amount that you've invested. Now, it's not shown in this, but you can go into your records, and most brokers kind of show this amount. It should be here in this cost basis, but I'm not sure why it's not there. But if it's not showing, but it shows an average price for you or a cost basis price, what you can do is you can times $20.48 by 800 to get you the total amount that you have invested in this position. Now, in terms of your covered call income and your put income, we need to factor that in to get a break-even price, because that is money you've obtained while holding these particular shares, or used to acquire these shares in the case of cash secure puts. So I've made a total of $4,858 of premium in this particular position. So that then allows me to calculate the break even. I'm not going to go into the formulas. You can go into that in your own time, but it's fairly straightforward. But trust me when I say that my break even for this position is $14.41. So, I've crawled back to a certain extent $6 from this. And before we go any further, if I just jump onto TradingView, just save that actually, you can see here that we have a line for my cost basis and a line for my break even. So you can visually see where we are. And one of the reasons why you want to understand your break even, especially when you can't sell covered calls at your cost basis. Because if I try to sell weekly or monthly covered calls at my cost basis, weekly is going to be zero. Monthly, you might get a couple of dollars. The next thing that I look at is to sell covered calls is I will look to sell covered calls at my break even level, because even if I did get early assignment, then I'm quite happy to take, well, I'm not happy to take early assignment because I want to keep the 4 grand that I made, but I know that I've got the comfort knowing that at least if I did get assigned early assigned, or if I forgot and it just assigned me and I missed the expiration date, so I didn't check the account, that I will lose my 800 shares at my break even. I'll lose the 4 grand, but I will get my 16.3k back untouched. Not the best solution, but it's at least then you can still make some premium on there. And if we just look at where we are, we're still like 60% away from the break even price. So we've still got kind of a long way to go to actually kind of get to break even. And to be fair, and I know this for true on Palantir, selling well, it was at highs before earnings of 11.62, so you might have got something at 14. But I've been selling covered calls between $12 and $11 now for the last few months, just to obtain that bit more of a premium. It's more of an advanced strategy, selling covered calls below your cost basis. I don't advise it for everybody, but I've been doing this for a while now and I'm comfortable doing that. But that just shows you what this cost basis calculator can give you in terms of just knowing your numbers. Now, as we've seen, is if I drop back down to a kind of a 4 hour chart, or let's do an hourly actually, it's a bit more interesting. And if we go into here, you can see from the highs of 11.62, it's now pretty much at the floor of lows of 9.10. Earnings really tanked Palantir, and it's down 7% today. It was down 12% yesterday. The whole market is kind of sold off today. So this is why, from my perspective, I then want to start looking at selling another cash secured put on Palantir. I'm already in the money now, actually, as I sold this yesterday when it was, at around the nine. What's this one here? When the day started, the day was here, yeah. Around when it was around the 10, it gapped down again today, so I'm already in the money on this particular one. But it doesn't matter because I need to lower my cost basis. So if we look at this now, is what I wanted to understand is what would my new cost basis and break even be if I did sell the 950 put. So in the video, again, the link's down below to see this video of me placing this trade live. I chose a put strike of 950. One contract or 100 shares, you have to put 100 in here. So you put the put strike in. If you're doing 2 contracts, it would be 200 shares, etc., etc. And then it's very important that you add in the premium that you received or thinking of getting for placing this trade. So before I place this trade, I put these numbers in, and what that does is it then spits out what your new kind of situation would be. So you can see now that I would now have 900 shares, 800 plus the 100, and this is showing here that I will have an extra 100 shares or 12.5% increase. My new invested capital would be 17.3k. Because what we're doing here is we're adding in the 16k plus the 950 if I did get assigned, so it's an additional 5.8%. And what you'll see here is my new cost basis drops by 6% to $1.22, right? So I go from $20.48 to $19.26. That's a big drop for a whole dollar, nearly, I said 6%, not even 10%. But, dropping it by that much, again, is bringing me closer and closer to the price. And then what it does here is that my break even drops by 60 cents to 13.81 by 4.1%. So this then allows me then to play around with different strike prices. So if I was to sell the 8, right? Let's go back again so I can kind of see. So cost basis was 19.26 and 13.81. If I do that again, 19.26. So you go from 19.26 to 19.09 and 13.81 to 13.64. So again, you can kind of play around with this before you start playing around with these figures. And this is what this cost basis calculator allows you to do. And then all you've got to do here is make sure then when you redo this, and if you did get assigned, you then are always updating your total premium and total invested, because every covered call you sell, every cash secure put you do, again, still adds to this total premium. So even if I didn't get assigned these shares, I'm still adding $47 to this 48.58. And again, this is assuming I get assigned. So in the example of the 9.5, I did the 30-day, I did the 30-day, what's it called? Put. So I made $47 divided by 950 collateral. That is 5% return in a month. So I made 5% of my money, and I've reduced my cost basis if I get assigned by $1.22 and reduce my break even by 60 cents. I think from a psychological perspective, to see a one from a cost basis perspective, I think will do good for my confidence level on this particular position. I'm not worried about this position. I'm thinking 5, 10 years away, so I'm happy to hold that money in Palantir for the long term. But while these prices are quote unquote considered cheap or cheaper relative to my cost basis, I might as well pick up an extra 100 shares every now and again because on average I'm spending what's that? Let's just do that. I've got it here really. Yeah, so I'm spending, $20 a share compared to a $9.50 per share. So, I might as well take advantage while these prices are there to accumulate and build a bigger position for less cost. So again, this is how you use this calculator. If you've got any questions, let me know. If you've got anything to add into this, let me know. I can look to build this in and build this as an ongoing spreadsheet. But it's very basic. It does the job that I needed to do. So if you want to go see that Palantir put that I made for 950 and picked up $47 premium, that's on the screen now. Like, download, subscribe, and I shall see you guys in the next video.